Welcome to the new Fireside chat with P Forum. Today, we have an exclusive conversation with one of the most fascinating minds in finance, Bernard Sabrier. As Group Chairman of Unigestion, Bernard has not only been at the forefront of major financial transformations, but has also impacted the future of sustainability investing, thematic investing, and philanthropy. From his early shift from private banking to institutional clients, his pioneering role in hedge funds, his key role in private equity, he has consistently demonstrated a unique ability to anticipate and lead market transformation. Today, we sit down with him at La Réserve Hotel in Geneva to explore his personal journey, his philosophies on investing, and his vision for the future of finance, and most important to him and to us, philanthropy. Bernard, thank you so much for joining us.
Thank you so much for such a welcome.
Thank you. So we want to start with, PE Forum, so private equity. We are noticing major shifts in the past years, and you've been at the forefront of selecting private equity investment. How do you see these shifts happening today, and what is your reading on the opportunity that private equity still represents?
Look, private equity has been growing at a fast pace in the last decades. Obviously, when we started 30 plus years ago, it was more a question of buying companies, which were most of the time, and still is the case, family-owned, because we believe that those companies have stronger roots, stronger values, a long-term perspective. They can be really the champions of tomorrow. But at that time, there was a huge arbitrage between the prices of private assets and public assets. So today it's a little bit different. The market has evolved, it has grown a lot. So today the prices of good assets in private equity are sometimes as high or higher than in the public market. You've seen a lot also of companies in the public market who have withdrew from the public market because either their market cap was too small or they thought it was better to remain private. So I think there is a huge opportunity in private markets, in private equity, to participate in the growth of the economy wherever you are.
And so if we dig in a little bit on the thematics within private equity, there's a lot of trends, buzzwords. We talk about secondaries, we talk about GP stakes, we talk about many things. For you, is there a particular segment, or is it a general strategy that needs to be applied as an investor?
I think as an investor, private assets in general is really a strategy that you should look for. The opportunities are so different and so vast, from infrastructure to secondaries to emerging managers to LP stakes, GP stakes. I don't think there is a unique recipe. Different groups are doing different things with different talents. So at Unigestion, we are concentrating more on secondaries because we think it's a very fluid market. We think you know better what you're buying. We concentrate a lot on emerging managers because we think that those are most of the time the guy with very, very strong talent, which are very eager to succeed. We concentrate, I don't like this word, the mid-market. We prefer the champions of tomorrow. We try to find growth companies which are really leaders in their sectors, even if they are not so big. We don't like so much buzzwords because as soon as there is the buzzword, there is a buzz price. So the whole thing in private equity is your entry point is critical, and the price of your entry point is critical. If you bought well, you've already done a good part of your journey. Doesn't mean that the rest is not important. It's critical, but buying well at a decent price, good assets is really good.
And so mentioning secondaries, is buying well synonymous of big discounts and in order to perform?
You know, secondaries are very counterintuitive. When we started 26 or 7 years ago to do secondaries, we thought we were going to buy assets at big discounts or good discounts, and we bought many assets at -20, -30, -40. And now, 25 years later, we've studied recently every single secondary transaction that we've done. And believe it or not, the best performance were done in companies or in portfolios that we bought at between 0 and 10% discounts. So we realized that secondaries basically enables you to buy gems at a good price. But if you buy crap at a very discounted price, normally you don't make so much returns.
Makes sense. And so you mentioned, public companies as well today retracting from the market sometimes. But generally speaking, compared to, the early stages, the early days of private equity, we see a much more crowded market. We see a much more tougher environment. Do you still see that private capital can achieve the outsized return that are expected?
I don't know what everyone means about outsized return. It has done well. I think it will continue to do well if you are investing with the best players, if you are really careful on buying healthy companies at good prices, etc. I think the competition, yes, it's tougher. You have much more players in the markets, but like in every other part of the investment universe, the first quartile is always the place you want to be in. Is it more difficult to be in the first quartile today than 30 years ago? Most probably yes. But the good news is the market has become much more fluid. The opportunities are much larger. And this market will continue to grow, to be more and more fluid, etc. People had disappointments in the recent years because a lot of their private equity portfolios didn't return enough cash or as much cash as they expected. So the DPI became more important than the IRR. We always thought that returning money back to our LPs was a mission critical, and I think it will continue to be like this.
And so if we look at a broader view today, if we look at more tense geopolitical situation, more unknown macroeconomic situation, some people today are making a parallel between the inauguration of President Trump versus the same time Davos happening, and if there's two visions of the world. How do you see private equity adapting to this, let's say, new environment?
I think private equity will adapt to anything and everything. The bad news for private equity, if you believe that interest rates goes to 10% and inflation goes to 8 or 9%, then it will be bad news because it will be a much harder environment, but for the whole economy in general. Most probably with the election of President Trump, we've entered into a very unknown world, because what he's doing, it might be a great success, but it has a lot of dangers embedded with his strategies, putting a lot of business operators at the government level has never been seen like this in the past. Will it be a success? Maybe. The international exposure that America is giving itself now is obviously also very different. President Trump promised peace everywhere, promised growth everywhere, promised huge tariffs, promised to take migrants or illegal people out, etc. I think all of those promises, some are very worrisome, some are totally unrealistic. Most probably he will change his mind or change his course 10 times a day, a week, or a month. So this will create volatility. This will create uncertainty. When there is volatility, when there is uncertainty, there are opportunities. So I think at the end of the day, I don't know if the next 5 years will be good or bad. I'm worried on many themes, more about moral issues, values, conflict of interest, etc. But for the market, I don't say it's neutral, but if you are flexible, if you are nimble, if you don't want to be stubborn to one ethos, or I think there will be opportunities.
I will go back to the opportunities. I just want to, jump on what you were saying. There's a view that it's you mentioned business people, coming at the forefront of government, and we can notice it, the trend more globally. And some people are saying, well, the true division is between bureaucracy and doers. Do you see this type of division in terms of world affairs?
First of all, I still don't know, and we have to understand who is the president of the United States. Is it Elon Musk or is it Donald Trump? But putting business people at the forefront of government departments and solving issues, I don't think you can solve government issues the same way you solve private company issues. And I'm just afraid that sometime a lot of those business people will try to take shortcuts and say, okay, let's fire 50,000 people, let's be more efficient doing this or that. It still remains to be seen, and some of those ultra-libertarians think we should take the Argentina as a model, and now look at what Miles has done. You can't do that in the US for sure, and you can't do that in Europe for sure, etc. So I think the challenges are very big or large. I think business people will have a positive impact on certain things at government level, but it's also very dangerous, and you'll see huge conflicts of interest arising. How we will solve them, I don't know.
Yeah, I mean, I believe that private sector is sometimes much more better I'd say managed than public, but it's a two different absolutely.
You don't manage 100 or 200 or 300 million country. Then the same way you manage a 10,000 person operations in the private sector.
Makes no doubt. Let's go back to our topic. So if we talk about private equity, do you see particular sectors and geographies that are of interest to you today?
Yes, obviously the world is moving so fast, and so many things are getting impacted, transformed. I think there are sectors which will continue to grow at a faster pace, around technology, around climate change, around mobility, around smart cities, around medical, around healthcare, so there are many themes. I tend to be a little bit more agnostic. I think you can find gems everywhere. We saw private equity deals in the last 3 or 4 decades, which have been hugely successful in very boring businesses. We did a deal in New Zealand with New Zealand buses, and there was nothing more boring than that. And we made 4 or 5 times our money. You had guys who made 5 and 10 times their money with steel, with automotive parts, which were very boring businesses. And sometimes you see a lot of people losing tons of money in the very hot sectors.
Agreed. So I want to go back to the early stages when you shifted, from private banking to institutional clients. At that time, what was your reading of the scene that pushed you to take this transformation?
We were at that time more Swiss-based than now, and Switzerland, especially Geneva, was the capital of private banking. We were doing private banking, and then in 1996, when we witnessed what the Americans were doing, and how they push and press the Swiss banks to reveal certain informations about accounts during the World War II, etc. I thought that managing undeclared assets was over, and we let basically our private client franchise go. We sold Bank Unigestion, and we thought that it was more interesting to concentrate on pensions, endowment, insurance companies, sovereign wealth in the future, and that's how we started in the early 2000s, basically.
And so this happened after your hostile takeover of Banca della Svizzera Italiana. Is that correct?
Yes, we did a hostile takeover on BSI, Banca Svizzera Italiana, which was at that time, I think, the fifth largest bank in the country in 1987. Then that was really a private equity transaction. And we sold it in 1993. And then we created Bank Unigestion because we thought that wealth management was a very good business to be in. And actually, I was wrong to sell the bank in 1996 because some of the wealth managers and private bankers have continued to do very, very well. When you see the Pictets and the Julius Baers of this world, the last decade, they've done very well.
And so this transaction and this hostile takeover and following your shift, was it inspired by your reading of the current situation, or also from a growth perspective that you saw for this particular domain?
No, we thought that the institutional asset management was going to grow because we saw more and more people. We saw pension fund growing. We saw insurance businesses growing. We saw institutional assets growing around the world. So we saw that those institutional assets will need managers, and that's how and why we did it. But I think both business have their attributes, and we like the institutional business. But for example, now 20 plus years after selling the private banking business, we are returning and creating a wealth management company dedicated to super high net worth individuals, because we believe that there is room there for to succeed. So I don't think you can nothing is black and white. In every of those businesses, asset managements, wealth managements, private banking, there are possibilities to grow. There are possibilities to, as long as you find a good niche, you make your clients happy, you perform decently, I think you have a chance.
You engaged very early with what were new themes, which were the hedge funds and also the private equity. At that time, was it more of an individual decision, meeting smart or good investors in the hedge funds and private equity domain, or was it more of a macro view that this was an upcoming trend?
No, we started with the hedge fund in the early mid-80s with my partner Patrick Fenal, and I had a background of foreign exchange trading, so I understood a little bit what macro trading was, and Patrick was also passionate about that. So we thought that there were at least a small group of outstanding traders who could do well in the macro space, and it lasted for, let's say, a good 20 years, when interest rates were high, where markets were diversified, where agnostic investment was paying off, and like every strategy, sometimes it fades. And for private equity, the same. We thought, it's a people's business. Mm-hmm. So in hedge fund in the early days, we met, and even after, we met fascinating investors, amazing minds, and the same in private equities. So basically, we invested in people more than in themes.
Within these people, are there some names in private equity where you were really truly inspired by what they were doing?
There are many immense talents in hedge funds and in private equity. Obviously, when you look at Paul Tudor Jones, at Louis Bacon, at Stan Druckenmiller, at Bruce Kovner, they were outstanding investors, and they still are for some of them in private equity. The same when you look at the firms like Blackstone and Carlyle and EQT and Cinven in the early days, etc. They were run by very, very strong personalities, by people who are very inspiring, and this is also why they succeeded. They didn't succeed because you have many people who do their jobs very well in finance, who perform very decently, but who never succeed or never succeed at this level. So why suddenly you can witness the success of a Carlyle, of an Apollo, of a Blackstone? It's because you have 2, 3, 4 guys who are very, very inspiring, both on the client side, on the investment side, and for their teams.
You're also a very good investor by the knowledge of everybody. When you meet with these people, is it something you recognize or a common denominator that you find within all of them, or is it each a particular case?
First of all, I don't know. You said I'm a good investor. I don't know.
Well, this is what the market says,
The market says, but we try to judge opportunities and to understand what people can do around those in the market and opportunities. I think the talents are pretty different between hedge funds investors and private equity investors. In the hedge fund side, we were very, very focused for all of our career in hedge funds with Patrick Fenal on macro hedge funds, because it's what we understood better. So we focus really on macro and long-short equity. There are some common denominators that normally works, but it's a very strange combination of how do you take risk and how do you avoid risk, and it's a kind of constant work to create an asymmetry in your portfolio. So basically, hedge fund trading is about asymmetry, is about discipline. It's not about information anymore. Everybody has information. So it's really about constructing portfolio, implementing your ideas in a way that you are constantly working with an asymmetric portfolio where your losses will be 2 and your winning trades will be 5. And the best traders in the world, most of the time, are not right more than 50 or 55% of the time. What makes them successful is the asymmetry. In private equity, I think it's very, very different. You had some financial artists during the period where interest rates went down, and they were capable of constructing deals using debts, and they were not really industrial operators. Mm-hmm. You have other people in private equity who are real industrial operators, and during the whole cycle, you need private equity guys to be hands-on, to be capable of helping companies to grow, of managing difficulties, helping management in those companies to become better, to focus on the right things. So I think it's very different.
And so, you reinvented basically Unigestion. Today, we're noticing a change also in the financial world. We're looking at much larger consolidation, much larger institution. Do you think that this will lead to also a new reinventing of Unigestion?
You have to reinvent yourself because the world is moving. So, and you don't want to move with the world. You want to try to anticipate what's going on. And whenever we did the right things, both in equities, because we had a great run when we started our minimum variance and low vol equity programs, Nobody believed in that. When we started in hedge fund, nobody believed in that, etc. So what we are trying to do is to identify what will be the next trends and how, as an investor, we can participate in this trend and help our client to participate in this trend. So most probably, I don't have such a strong view today. I believe that around tokenization there will be huge changes for investors, because I'm convinced that every single asset will be tokenized, and this will change a lot the picture and the framework of how do we invest. And but the rest, I think private equity will remain, or private assets in general will remain, a very important part of the playground of the investment universe.
Do you see that there's a contradiction between this consolidation that is happening and these, sort of a winner-takes-all model versus finding and nurturing also emerging private equity managers?
Yeah, we are. We live in a polarized world, and we see it in the stock market. You have the Magnificent Seven, you have Nvidia, and if you miss those 7 stocks, you didn't do anything. And the world is polarized in everything, in politics, in investments. So I think this will most probably continue. You're going to have huge success, and the BlackRock and the Amundi and the Blackstones of this world will continue to take the big chunk of the money, because also it's easier for when you are an asset owner with 3, 4, 500 or $1 trillion and you need to allocate, the work that your team has to do to allocate 100 million in a Unigestion fund is exactly the same work, or maybe even more for the smaller players than putting $1 billion or $2 billion or $3 billion at work with BlackRock or Amundi or Carlyle or whomever, or Ardian. So I think this trend will continue with the mega asset owners, but even those guys, they start to understand better and better that there are some niches, and if you are present in those niches, you're going to do outstanding return. You're going to have more access to certain opportunities that you don't see in the mega trends or the mega market. The big problem is when you stand in the middle. You are not big enough and you are not small enough. So I think if you are small enough, nimble enough, differentiated enough, and you offer something like, you can't say that nobody else offer, but very few others offer, and you can really distinguish yourself amongst other managers, I think life will continue to be okay. If you start to be really big enough and your competition is the big guys, and you're not big enough, that's a problem.
And so when you talk about the big guys and being less nimble, or do you think that this comes at the cost of performance?
Yes. Well, most of the big asset owners who have given money to the largest managers in the world, they do an index at the end of the day. And this is why, for example, in the public markets, you see the passive, which has grown at a phenomenal pace versus the active managers. But so most of the portfolios, I think, will continue to be a kind of barbell between active and passive. The passive will be bigger than the active. In private equity, everyone is active. You don't have really. You start to have indices, but most probably when you create a portfolio with the huge names, you will tend to be more like a passive or more like an index, and you'll still have several managers who have specialties and who will thrive.
If we go back to what you mentioned, that you're looking at, a wealth management reinvention, let's say, with Unigestion for high net worth individual and family offices. Are the needs of these large family offices the same as the institutionals in terms of disclosure, in terms of operations, or are they different?
I think they are different because the whole institutional world is process driven. It starts with an RFP, they have teams, they have boards, so the family offices, each and every one of them is different. Each and every family have a different background, different nationalities. Sometimes the guy who made the money is still there. Sometimes it's already the second or the third generation, but they are less, in general, less process oriented. Even when they have very long-term goals, they tend to be more inclined to believe in certain things which are closer to the family roots, and so I think the needs are very, very different, and you have to understand that it's true that every client is different. We have hundreds of institutional clients, and each and every one of them are different, but they have certain common characteristics. Families, their only common characteristic is that each and every one of them is unique.
And so in their approach to private equity, are they generally more inclined to want to do direct deals and invest in private equity in order to have this deal flow, or is it more, as you mentioned, long-term goals?
You can have deal flow, direct, and have long-term goals. Mm-hmm. But again, every family is different. You may have a family who will have 10 or 20% in private equity. You have other families who have up to 50 or 60% in private equity. Or you have even families who are 100% in private businesses because they don't believe in managing their assets otherwise, because that's everything they've done, that everything they've known, it's that where they've succeeded. And they keep this entrepreneurial mind in spirit. You have others who've tried to manage the family wealth more like an endowment, and those families, they take more the endowment model, and they will have an exposure to private equities through funds. But if you commit large sums of money to private equity, you want also to optimize your cost. So when you put, and you have families now to put 50 and 100 million tickets or more in certain funds, you want to have co-investment rights, you want to have co-investment at no fee, no carry, in order to see the opportunities, to get involved directly in certain things and optimize the cost of your portfolio.
I believe your son initiated the idea of going back to wealth management and families, if I'm not mistaken. What if your son had come up and told you that he wanted to be an artist? Would you have accepted, just like you came up to your father and said you wanted to be a photographer? And could you tell us more about that?
No, my children have children, and each of them are doing different things. One is making high-end jewelry. The other one is a chef. The other one was working for many years for a charity in the US. My son happened to be in the banking industry, but he didn't start in the banking industry. I respect whatever my children wants to do, and my only aim is that they thrive, they are happy, they do what passionate, that they have a passion.
And so you have a passion as well. You have photography as a passion. How did that go when with your father?
But it was different times, and I suppose my father didn't want me to be a photographer because I wanted to become a photographer. I suppose he was worried that you can't live out of photography, and in a way he was right, because it was most probably harder to live as a photographer and make a decent living for you or your family than if you were a doctor, a lawyer, or an investment banker or whatever. So no, I respect whatever my children wants to do. I just want them to have a passion and to be happy.
Do you regret you not pursuing a photography career?
No, because some days and sometimes yes, but in general no, because I continued to entertain this passion, and I still take some pictures, and maybe I would have never been very talented photographer, so I don't know. So I think it's better to remain.
You're always modest, but if we go to photography, did this in a certain way help you to find niche or in your career, in your investing career? Do you think it gave you an edge basically?
I think it's interesting because photography is about seizing a moment, and photography is basically about three things. It's about the moment, it's about the light, and it's about the frame. And most probably, when you make me think about that, most probably investment, you have to have a frame, because if you don't have a frame, you invest anywhere, everywhere, and you get lost in your. So I think having a frame is very important. Like the frame in the photograph, when you photograph the what we say in French, the cadrage, the frame is really very important. Then the light, but in investment also the light is what's going on in the macro world, in the geopolitical world. Basically, it's your light, and then it's about the instant. So, investing at the right time, and momentum is key also. So I see now that you are speaking about that, I see some commonalities between photography and investment.
And so, if you have also a big role in philanthropy, and you've created the FAMSA Foundation, and you've also have Action Children that you've pushed forward. Could you conceive your financial role without this, without your philanthropic achievements?
First of all, I'm not a philanthropist, and I don't like the word philanthropy. In the best case scenario, I'm trying to be a decent citizen and trying to give back certain things that I've been lucky enough to get over the years, and I've been lucky enough to be raised in a democratic environment. I've been lucky enough to work in a business where you could be successful not only in the business but also a bit financially, etc. So when you talk about philanthropy, I'm just trying to talk about being a decent or a good citizen. Yeah, 30 years ago I started Children Action, which is a charity focusing only on children, mostly on giving access to healthcare to many children, on mental health and surgery. And 20 years ago, I created this foundation called FAMSA Foundation, which became the controlling shareholder of Unigestion. That's more to give Unigestion an anchor shareholder, which also shows what are our values, and our values goes beyond just the financial or the asset management world. But
and so when you set up FAMSA, it's also the model, I believe, of Rolex, which is a foundation. Was this at the same time, before, after? When did that take place?
First of all, it would not be very modest to believe that you can. Yes, the Rolex model is very inspiring, and what Mr. Hans Wilsdorf has done with Rolex, putting 100% of the Rolex shares into the Wilsdorf Foundation. So today, everyone who buys a Rolex around the world, basically, it's like, it's not like giving money to a charity, but nearly. So I thought that this business model is fascinating. It's inspiring, and obviously, if we could have a fraction of the success of what Mr. Wilsdorf had with the Wilsdorf Foundation and Rolex, it would be terrific.
And so, with Children Action, you chose specific goals. How do you measure your impact? How do you measure what makes you satisfied or want to reach more in terms of these goals and specifically?
The more I grew into this world of impact, and the more I'm fascinated and I admire a lot those huge foundations like the Gates Foundation, like the Rockefeller and others. But small is beautiful. It's a world where things are very, very difficult to achieve. Measuring impact is not obvious, and a lot of people believe that because they do good, they do it well. So I think you have to be very humble and realize that it's not because you do good that you do well, and you have to be obsessed to try to measure if what you do good is well done and what you can improve. So in certain things, at Children Action, when we have operated over 15,000 children, you do a heart surgery, you do an orthopedic surgery or a heavy burn scale sequela, you see immediately if it's a success or not. The kid was not walking, he's walking, he had an issue, this issue has gone. So in other things you do, it's more difficult to really measure the impact. In the mental health, we run, I think today, one of the largest projects in Europe to fight against teenagers who try to commit suicide, and we have a joint venture with the state hospital in Geneva, with the state hospital in Zurich. So there, it's reasonably easy also to measure your impact or your success, because you can understand very, very quickly how many children are going to recidive or not. So, for example, we know that we've lowered the rate of recidive by 40%. We know that more than 90% of those teenagers who go through those programs, they see a psychiatrist after, etc. When you act, I don't know, in a favela in Peru or in Argentina or in Brazil, and you help 12-year-old mothers to get their rights after their pregnancy, to raise their child, to understand certain things, it will be very, very difficult really to measure if in 10 years' time those young girls will be better than other ones, because they are migrating, they are moving from one favela to the other. So I think you have to remain humble and understand that if your programs are small enough, you can understand better, and you have to accept the fact that there are some impact which are harder to measure than others.
There's definitely a similarity between basically your vision for Unigestion and being, hands-on, and the way you perceive the performance and wanting to achieve on the children action. I wanted to see, if you look at the different needs between different parts of the world, which is emerging markets and more developed, we can use that term, but more advanced economies, is it difficult to accept this difference between, a child that needs a life-saving surgery and another child it's more of a mental health issues? Is it difficult to cope this?
It's very interesting what you say, and it's a very good question. And we are thinking very deep about that at Children Action now after 30 years. When we started, the needs were very, very different. The needs were really in the emerging market worlds. And when we were going to Vietnam in the early days or places like this, we saw hundreds of children who had really no capabilities to be treated by anyone in the countries. And in our countries, you had some wealthier people than others, but it was mostly in the Western democracy dominated by a middle class, which was doing okay. Today, in a lot of countries which had nothing 30 years ago. Globalization took 1 billion people out of poverty, and in those countries, you see much better doctors, you see much better equipment, you see. So today, obviously, in Laos, in Vietnam, in Myanmar, it's different because of the army and now, but and the military regime, but those countries have grown so much and so well that there are still needs, but much less. What is shocking is the speed at where our societies have deteriorated and what the impact of globalization has created and taken most probably a third of the middle class into lower middle class or even worse. And today, when you look at places like France, or you have close to 15% of the population living below the level of poverty. And then you have all the issues about new technology, internet, social media, etc., which created a lot of mental health issues around teenagers and adults. So I think that the needs have shifted, and the needs are today very different than they were when we started.
And so you have different views within, managing. I know you don't like the word philanthropy, but let's say some charitable enterprises. Some of the people that launch them do not want to deal with government. They limit to the maximum because they feel that this can stop them, especially in certain countries. And others seek cooperation, partnership with the government. I don't know which one works best, but for you, do you see in this model which formula work better?
For us, we don't know what works better, but for us, we never did anything with side by side with the government. But for example, we love public-private partnership. What we've done, for example, with the Geneva state hospitals in trying to help teenagers who not committing suicide or treat them when they've tried, has been really powerful, because you can't do certain things as a NGO, a private NGO. I think mixing the forces between public hospitals who have the best talents, who see the most of the patients, etc., give you a huge leverage. Some people are interested in doing charity at scale, and they want to do it with government support, grants, etc. It hasn't been our model. I don't know which one is better. The only thing I'm sure is ours is smaller, it's less scalable, but we have impacted the life of only 250,000 children. Some people have impacted the lives of tens of millions. We prefer to impact the life of 10 children in the best possible way than thousands or millions. But I don't know. Everything is good. It depends what your
strategy is.
Yes, what your strategy is and how do you feel.
If I were to ask you to choose today between your role in finance or your role in, sorry for the word, but philanthropy or photography, which would you choose?
A little bit of each, because I think life is, it's strange again what you say, and it's interesting. I like black and white photography, so I like monochromy. But I don't know why I like monochromy, because in life I like diversity. I'm an open person. I never cared. I never thought about where people came from, what was their background, their religion, their whatever. So, and I think if you run your life, yes, you can be passionate about one thing and do it very, very well. So maybe it's because I'm not good enough at anything that I want to do several.
Or you're good at everything, so
no,
it can be both.
No, I don't think so.
So the Gulf region is undergoing a big transformation. And the sovereign wealth fund has really positioned themselves as, the new tool or at the cornerstone of the strategies of these countries. How do you see their role within the domestic policies for the Gulf and also on an international level?
I don't know if I'm the best person to answer that, but it's happened that last week I was in the Gulf, and every time I go, I'm fascinated by what they've achieved. But more than that, it's by their vision. I remember decades ago, people said, yes, in the Gulf, it's not because they have the oil or they have the money. Money can't buy everything. And it's true that money cannot buy everything. But what is really fascinating is that today, the sheikh, the governments, the sovereign wealth, they have a vision. And some people can contest that this is the right or the wrong vision, but they have the vision, they have the means to implement it, and they have the tools and the people both locally and internationally. And what is fascinating is that, first of all, their local strength has become very international because the young generation of ministers, etc., they've been studied at MIT, Harvard, and wherever. And they've taken on board a lot of foreigners to help them to implement this vision. So I think if the world is at peace and if the Middle Eastern region get a little bit more peaceful, which I do hope it can happen, there is phenomenal growth, and most probably as we don't recognize Abu Dhabi, Dubai, Riyadh, today, if we compare with 10 or 15 years ago, I'm sure in 10 or 15 years we won't recognize it. And they have, at least for some of them, they have this kind of three ways working together. They want to mix art, security, knowledge, vision, and growth, and that's why it attracts also so many younger people, from Europe moving to the Middle East. And obviously, when you live in Europe, I suppose June, July, August are not great fun in the Middle East because of the temperature. But when they see everything, when they see that they put their kids in the best schools today there, when they see that if they are sick, they have access to the Mayo Clinic or the Cleveland Clinic or whatever, when they see that they can participate into businesses which are fascinating, and that those countries wants to be not to buy everything, but to become a reference in the world in a certain way.
You're based in Singapore. How do you compare, if you look at what you see? You were in the Gulf, you mentioned that last week. How do you see the two? And would you consider at a point in time, you've traveled the world, lived all across the world, would you consider moving and living in the Gulf region?
Tomorrow, I would live in Abu Dhabi tomorrow. Mm-hmm. I think it's very different because Asia is different than Middle East, mm-hmm. but there are some commonalities. Asia, everything you feel is about size, is about kind of density of population, which you don't have in the Middle East. So it's a very different feeling or perspective. But Singapore, when we moved to Singapore with my wife and when we opened the office there more than 15 years ago, 17 years ago, they were really very, very passionate about bringing foreign knowledge, and a little bit the same way like the Middle East is doing it now, and especially the UAE, but they didn't have the same means. I think when you look at the means of Abu Dhabi, Saudi Arabia, etc., they are very different than the means of Singapore. So if they use it well, I'm not competent enough to judge, but I think they have a huge chance to become really relevant.
And in today's world, you think that, where would you see the opportunity more on sectors or on geographies? Because you mentioned both, and as a conclusion, what excites you in the new finance world and how things are evolving?
What excites me is the new disorder. Most people are excited about the new order. I'm excited about the new disorder. Because
you see opportunities?
Yeah, because I see that in this disorder some things will emerge, and if everything is written in the sand, there is not much. You can't get any other advantage versus the other, because everyone knows how to read or whatever is written. Geography, yes, I continue to believe that China and Asia will represent lots of opportunities. I don't believe that tariffs and all those things will work as well as expected. I think China will continue to grow, not only industrially, but also in the technology world. They are very, very strong. What you see, what's going on in Korea, in AI, in gaming, and all those things. So Asia, I think, will continue to be a big driver. Most probably certain regions of South America will also continue to grow quite fast. Everybody is very bearish on Europe, saying that Europe is just good now at making wine dresses and
managing decline.
Yes, and managing decline. Yes, but you have pockets of very interesting things in Europe. When you go to northern Italy, when you go to Germany, in what they call the Mittelstand, the family businesses, you still have a lot of rich opportunities, which will continue. So I think, you have to be open. You have to look for, you have to look for values. You have to look for potential. You have to look for quality, excellence, hard work. If you find that in a company in Italy, in Spain, who would have ever believed 10 years ago that an Italian bank will try to buy a German bank, or that Greece will ask their people to work 6 days a week and not 5. And so I don't trust the ideas that things are black or are white. I think we are always in a gray zone, and in this gray zone, if you can identify your value, your growth drivers, what you believe in businesses, in terms of ethics, I think that you can do good things everywhere.
And so, to conclude, what would be your message to the next generation of investors?
Being curious, being passionate. Don't take no for an answer in any ways, and yes, and never be afraid to be out of your comfort zone, because I think investing well is being out of your comfort zone. If you are in your comfort zone, you are not a good investor.
This is a very good message. Bernard, thank you so much for taking the time and joining us today at PE Forum.
No, my pleasure. Thank you so much.
Thank you.
Thank you, Khaled.